Hey, good morning, you amazing human beings. Guys, it is Tuesday, the 23rd. It is Pounds for Breakfast. It is time to get started and jump into the markets. Now, please remember this week we are easing into things. We're getting back into the shows. We're getting back into everything that we've currently been doing. And so please bear with us this week. Moving forward, we will be giving out shows a lot earlier. We'll be pre-planning out the whole week, what is happening, when you can expect to see us live, so on and so forth. Okay, guys, so let's jump in. We've got a few things to speak about today, a few trades that I'm very, very interested in, and a few trade opportunities we're going to be able to take advantage of this morning already. So stay tuned for that, guys. If you haven't yet already, make sure you hit that like button. Make sure you are subscribed. So whenever we go live, you're notified and you are aware that we are live together. Okay, so let's start off. We're going to have a look real quickly at some of the news that's happening in the world. And yesterday, the world is pretty much dominated by speak about this debt ceiling that is apparently gonna, grind the US economy to a halt and pretty much stop everything from moving. As I said yesterday, US is a little bit too big to fail. They will always reach some sort of conclusion, right? Yesterday, if you guys remember in the news, there was a lot of talk about, the stocks are mixed in preparation for this debt ceiling, and oh no, and you need to remember, as I said yesterday again, some of the biggest companies in the world, some of the biggest Wall Street entities own the news. Think about this, right? Some of the biggest LPs, the biggest banks, the biggest entities on Wall Street have a hand in the news. So think about this really quickly, right? If you foresee something is going to skyrocket, right? Do you want everybody in that move, or do you want to create a little bit of fear? Do you want to create a little bit of doubt? When it comes to the markets, right, there has to be a buyer, there has to be a seller, right? There can't be an imbalance. When we see these imbalances, that's when we see markets move. But in order for something to move up, in order to buy something, there needs to be someone willing and able to be able to take that sell. We need to remember that as traders. If you guys go through the DVDM Markets Academy, I teach you in looking at price, when looking at action, when reading the story of price, there's this constant battle between buyers and sellers, bulls and bears. In order for there to be something to be able to be bought, there needs to be a willing and able seller. So in a market situation, right, how do they create that accumulation stage? How do they create an opportunity to get a bunch of people to buy or sell the news, right? So as much as we look at some of these fundamental news events, always keep a look at it with the eye of the bank. What would the bank do, right? If the bank knew that there could be a crisis on hand, if the bank knew that there could be a rally on a stock price entity, you've got to think about it. Where is their best interest? Okay. And in order for them to offload a stock, share, bond, dividend, whatever the case may be, there needs to be willing and able buyers in order to take that up. So when you look at the story of price and that accumulation stage, the markup stage, the reaccumulation stage, and the distribution stage, in order to distribute and sell their positions, they need willing and able buyers to be able to sell their positions. So in most cases, when you're seeing something being hyped up that, wow, right, the stock has been doing better than it's ever done before, that's the stage at which they've made their profit and they wish to distribute their assets, right? They need willing and able buyers for them to sell their positions to. And there and often, in most cases, if you look at the market maker strategy, that is where you see price start to take a bit of a dip, right? Once price starts turning, that is when people get fearful and they start to buy back those stocks and shares that they sold at a profit. They start to buy it back on the way down, right? Then they create hype, they reaccumulate, they have a bit of a markdown process, they reaccumulate, and so the process moves on. So you need to understand that when looking at the news. Don't look at the news blindly and just say, oh wow, Biden says this, and oh wow, JP Morgan says that. Think about, why are they saying that? What is their interest in making this public information available? So for those of you who've been in the space for a while, you understand this process. But if you haven't and you're new to this game, please start to pay a little bit more attention to that. I will obviously, as best I can, try and sift through, what is real, what isn't real. But again, there is billions of dollars invested in the news, the media, the propaganda around markets, specifically politics and everything else in life. Obviously, we know this, but specifically around what we do from an analysis perspective, there's a lot of traders out there that simply ignore completely some of these news / fundamental data events and purely look at price action. As you guys know, and as you guys go through the academy, you'll realize that I'm a price action trader, meaning I care not for fundamentals, I care not for the news. However, I do take it into consideration to help better my position and my understanding within the markets. Okay, so please understand that when we speak about certain things, that is the bias. The weighting is 80 to 90% price action. There's maybe 5% in the actual fundamental data event, another 5% sitting in news, and different sentimental opinions or sentimental analysis and opinions that float around the markets, right? Just so we're on the same page there. But other than that, guys, listen, I hope you are having a great Tuesday. I hope it's going to go even better from here. Let's have a quick look. Yeah, Bloomberg did not get that level by looking out for retail, right? You look at Bloomberg, right? The Bloomberg finance terminal, it's owned by Michael Bloomberg, right? Who also owns a slurry of different media outlets. Just so we're on the same page. So as I said yesterday, I didn't see anything massive coming out of this debt ceiling issue. They obviously resolved that really quickly. Guys, I'm going to quickly do a very quick intermission. I quickly want to do a battery change. I think I left this one on a little bit too long. So just give me, let's see if I can do this in plus minus, let's say about 20 seconds. Give me 20 seconds and I'll be right back and we will get back into things. That is super unfortunate. I actually went red and blushed there in the background. That is the wrong intermission screen. We will get that fixed. I see Marsha sticking her head up over there. But anyway, just want to make sure we're all on the same page there. Fresh batteries ready to go. Okay, so a couple things we need to talk about this morning. Stocks closed mixed ahead of this renewed debt talks. Debt talks will prevail, right? They will find an outcome. They will lift the ceiling. They will find a way around it. But it is still a big talking point in terms of how these debt ceilings are created and how they continue to get absolutely smashed and dominated. It doesn't matter how many times they change the debt ceiling, it continues to blow up, and pretty much it's going to continue to grow no matter what. Outside of that, just looking at the mixed reaction of the market from yesterday, there's a few main items that really performed extremely well yesterday, namely being Tesla. I also saw that, was it Pfizer? Yep, Pfizer did 5.38%. Google Meta faring fairly well, plus 1% across the board. Let's have a look here. PayPal also doing extremely well, 3.5%, but fairly mixed bag. There are some negatives around the block, but pretty much net even across the board as we look at the markets. From an investing and economic calendar perspective, there's some really good opportunities, and I'm very excited for this afternoon. Just looking through the calendar, in the next hour by about 10 o'clock GMT plus 2, we've got a bunch of euro and pound data that is going to be coming out. The only one that I do believe we're going to have to be paying a little bit more attention to is going to be at 10:30, some of this PMI data sitting on the pound, right? I think it's going to be very crucial we have a look at that. There may be some trade opportunities available to us sitting in that Purchasing Manager Index data. Now, how does that work, right? Now, essentially, the PMI data is probably one of the super simplest ways to trade fundamental data, and the Purchasing Manager Index essentially looks at the strength of, how purchasers are perceiving the markets, right? There's also another view which also is relating to inflation, and can otherwise also be having a look at, as we've seen the CPI, Consumer Price Index, we can also see that the Manufacturing Purchaser Index can also be related to inflation, right? So we do want to pay a little bit of attention to that. If that number ticks up, it generally performs well for the currency at hand, but is generally bad long-term for an economy if things keep becoming more and more expensive, right? So just something just to take a little bit of note of, and we're obviously going to pay a little bit more attention to that. But moving back into the balance of the day, we have quite a lot to look after or look forward to, And I'm specifically quite excited this afternoon when we get closer to that 4 o'clock mark, as I showed you guys yesterday with our strategy in terms of looking at the initial New York Stock Exchange move and then looking at that 4 o'clock reversal. We have some fundamental data that may help us and may add some volume to that directional moves, right? We've got manufacturing PMI for May on the dollar, services PMI for May on the dollar, and then the interesting one is going to be new home sales at 4 o'clock. Now, new home sales is generally used quite widely just to look at the strength of an economy, right? When new home sales decline, generally people are feeling less optimistic about the current situation of the economy. If new home sales increase, it generally says that people are feeling optimistic and are making that long-term commitment, such as a house. And they say between a house, marriage, and having children, those are one of the three biggest things. People generally don't buy homes when feeling under distress or feeling that the economy is potentially in not such great of a form. But other than that, guys, we are here to talk about the markets. So I want to jump in and let's have a look at what we're going to be dealing with from a markets perspective. Now, I've isolated a couple trades that I feel pretty excited about. Some of these we've touched on yesterday. One of them is ready for potential breakout situation. So let's jump in and let's give it a quick look as to what we're going to be doing this morning. So the first one we're going to be looking at is going to be USD CHF. USD CHF, as we spoke about yesterday, was sitting in that little bit of a breakout situation towards that downside, right? We failed market structure. We've stayed below a significant market resistance level, and we're trying to make that rebuild. We're trying to make that retouch back into that level. That's 0.89943 is basically where that main resistance level sits. Now, how we can deal with this, we can deal with this from a scalping perspective in order to get an exact entry point. And what I like to do here is I like to really drill down and get closer and closer to try and see, is there some market structure we can rely on? This is 30 minutes. This is 15 minutes. And what I can say and what I can see here is I would essentially utilize this area over here to potentially pull a trigger should we end up failing this market structure, right? So I would be looking here this morning for some sort of failure level or failure point below that market level there. If I make that too thin, there we go. So should we start to dip below 0.8978, that would be a potential opportunity I would look at to start to look for a short. Again, from a stop loss perspective, we're looking at about 20 pips to the top side. But again, the downside opportunity is obviously substantially larger. Going back onto a 4-hour time frame, we will have the opportunity then to make a much larger retracement towards that downside. Again, looking at where we are in the state of USD CHF, right, we can see that there's still quite a bit of momentum towards the downside. So yeah, we are going to be having quite a big push there should we start to fail that level. And I would love to get in at a nice early point right there at that level there. Sticking with the FX side, before I get into gold, I just want to show you guys really quickly what ended up happening yesterday on USD ZAR. So USD ZAR made that push through. We spoke about this build up to the top side. There's a 4-hour time frame. We were there yesterday morning, sitting at about 19 Rand 37 cents, 65 pips to the dollar. We pushed down to that support number 1, made a little bit of a retest there, and then started to make that push towards the downside. I was a little bit hesitant to sell immediately in that region because, again, I felt that this zone here is going to be, you know, the main talking point, right? A breakout of this zone for me would be that main area point of discussion. Now, I am going to make this zone a little bit larger just to encompass and make sure that we're not going to sort of get into this thing prematurely. And I just want to make a zoom out really quickly, just as we look a little bit closer. I just want to make sure there's no other resistance levels we're not paying any attention to. 1926. It's been a while since we've been in this level, so let's just have a look here. So I'm simply just looking at that's the place I'm trying to zoom into. So I'm primarily studying what happened in April of 2020, right? Pretty much the start of COVID, the pandemic, once it sort of really flurried through into SA, that's kind of that high that we hit there, if you guys remember. It was pretty much the announcement of lockdown. I mean, everybody remembers that. We don't need to recap. But this zone that we're in, and that area that we're in, is really going to be a massive determining factor. And I'd like to get a little bit closer in, if the data will allow it, or I don't know if it's going to allow me to get all the way down there on this time frame. Let's see. Sorry, excuse the scrolling. Okay. So some interesting information then that sits here in this level is that we had a fairly decent level of support on 1912. The absolute high of the pandemic era was at 1934. So between 1912 and 1934, that is going to have to be the area we're going to have to focus on. I mean, that's been the areas that we've been absolutely testing and or pushing through. So for me, I would really be keen to look at whether we see a break over that 1937. And if we do, then absolutely the ceiling is going to be that 1953 and or beyond. Right. Again, there's not a lot stopping the South African economy from being extremely subject to any sort of external bad influences right now. And so this is going to be the key area that I'm going to monitor. So for me, what I'm going to be doing, because I've got quite a busy day planned ahead, I'm going to end up setting up some penning orders above this level. So I'm going to be setting up some penning levels above 1938 as a buy stop. I'm going to set up some sell stops on 1918, right? Let's quickly do that real quickly. So let's see here. Might even be a better way of doing this. And I sometimes change charts that are sometimes busy, not too busy, just to make sure that I am getting all the different views that I need to get. And what I'm going to do here as well is I'm just going to see if I can't see a parallel trend here, which it looks like we might have already gone through. Okay. So that is a little bit high. 1937, 1938 is a little bit high, but I do still think that's kind of going to be the safe point. I'd like to get it a little bit earlier than that, but regardless, that is probably going to end up being the zone that I need to consider getting a little bit long into. I just want to change one or two different time frames just to make sure there's nothing that I'm missing. If there's anything else that I'm missing, you guys are welcome to jump in and chime in. If there's anything else you're seeing, but from my perspective, I'm trying to give the market the absolute benefit of doubt here in terms of where this could be going. Other thing I also want to do real quickly, I just want to incorporate, I just want to see if I can get a RSI in here. Okay, so the other thing that's going to help here from an entry or bias perspective is going to be the fact that we have a bit of divergence on the RSI. We've got this lower low situation pushing out to the downside. We've got a higher low sitting on the RSI, showing that there's definitely some interest in divergence here. We definitely have a few more buyers in this region than we do sellers. And I think for that reason, I'm going to maybe consider getting into a buy setup here on USD ZAR. So what I'm going to do here is I'm going to place in I'm going to pop my stop loss just below this previous support, and I'm going to look for a portion of my TP in this area. I'm actually going to set my TP much higher and rather deal with this from a trailing stop perspective. So I'm going to be purchasing I'm putting in a buy now, and I'm going to look for, and I'm basically going to run a 5,000 points trailing. Okay, and that will mean that any sort of substantial shifts, I'll try and grab some of those profits. And again, that's just due to a couple reasons. The first reason being that, you know, we've cleared some immediate support / resistance levels right here down below. The place we're sitting on is basically a massive resistance level on the pre-COVID, or pretty much the start of the COVID level. So I'm willing to hold the USD ZAR long here. Again, just looking at where price and market structure is, there may be an opportunity for a little bit of a low here, but I'm very happy to hold a swing of that nature, of that sort. So I'm very, very happy to pretty much hold that. Right, now the next thing I want to talk about and get into is going to be gold, right? And this is going to be interesting because, again, we were seeing a little bit of divergence this morning prior to starting the show. Again, this is gold on a 15-minute time frame, and I was simply looking at this market structure, the support area, this zone that we were busy hitting, and I was seeing a little bit of divergence here, in the sense that we were making these lower lows, starting to appear to make these higher lows from an RSI perspective, but yet we're seeing gold sort of poke through the floor here, right? Now, gold falling gives us an indication of a stronger dollar, right? Again, supporting a USD ZAR long, right? So for that correlation, I'm looking, and I'm pretty optimistic here to look for a short position on gold as we've broken a key support here. And the reason I've labeled this as a key support was due to the fact that if we look at our move from yesterday, this is our trade from yesterday, or our discussion from yesterday, was we had this massive uptick on Friday, that was the 19th, massive impulse towards the top side. And I spoke about the fact that we should start to break down that volume towards the downside, and we should start to get to some known fib level. I'm going to drop to a 30-minute time frame. It maybe even an hour. Let's get down to an hour. It will be a bit clearer for those of you watching on cell phones or at home. I'm just going to close that up there really quickly and make that a bit smaller. Oh, there we go. 2 RSIs, that's why. Okay. Let's get rid of those 2. There we go. Okay, so that should be nice and big. So again, Friday's massive volume to the top side. We started to make that breakdown yesterday. Price did immediately make a little bit of a push up, which is unfortunate, but ultimately failed towards the downside. Now, the reason I highlighted this area in this zone as a massive support / resistance is, you guys will remember yesterday I said that we could make a move to the 78.6, the 61.8, or the 78.6, but the 88.2 is considered the lowest point of retracement. When we look at a massive move to the top side, we know that everything that goes up must come down, everything goes down must come up. So in order of this, move to the top side, we could have expected a pullback to the 61.8, a pullback to the 78.6, but a pullback past the 88.2 means that the bull move is dead. Okay, and that bull move being dead breaks a couple things, or at least breaks through a couple rules at least. First rule that it breaks is this rising market structure is then dead. It's past 88.2, and it potentially means we have some grounds for a decent sell towards that downside, right? So for this morning session, I'm going to be holding 2 positions. I'm going to be holding a short, I'm going to be holding a short position with my stop loss above the 88.2. And then in secondary to that, I'm going to be holding my USD ZAR long, which is teetering into profit. It's kind of moving around a little bit of profits here and there. Let's just have a look here. There's my USD ZAR buy. Is that my buy? Where's my buy? There's a different chart. There's my buy. There we go. There's my buy. Okay. So my USD ZAR buy is already in a good amount of profit. Nice little candlestick there. So I'm going to just go ahead and have a look at decent amount of support. It would be nice to get a nice little upshoot here on USD ZAR. And again, I'm just utilizing a trailing stop of, I think I set it at 4,000 points, if I'm not mistaken. So the second we get to 1932, I'll start to lock in some profits, or at least at 1932, my profit will start to go, my stop loss will move into a profitable position. Okay, next up, US30, something I really want to talk about as well. And I should have potentially spoken about this first, just because of the market structure that we were in. And I want you guys just to have a look at this. US30 was in a really nice and tidy, neat consolidation towards the downside. Okay, and what I want us to pay attention to on US30 this morning is that in terms of this move, right, we had a bit of a rising market structure here. I'm going to just highlight what that would have looked like, or what that was planning out or panning out to be. And it was looking a little something like that, right? Just have a look at that section there, ignore all the other craziness on the charts, but that is what we were having a look at. And I was quite curious this morning at the time of starting the broadcast, which was around about there at 10 o'clock, whether we would continue in this market structure or we would break through and start to look for some buy opportunities. Now, we are still in this market structure, right? Nothing yet amazing in terms of a breakout, in terms of a turnaround, but I would really consider monitoring this market structure. This is currently US30, otherwise known as Dow Jones, currently sitting on a 5-minute time frame, and all I'm looking at is this market structure, the rising market price, and just whether we fail and make any further lows here, or we break through and we start to move to highs. So this would be something I would like to deal with from a pending order perspective. Is what I potentially have a look at doing. Gold looks to be selling off very nicely this morning for us. Let's give gold a quick look and a flick back there. Gold is selling very, very nicely for us. Again, breaking through at 88.2. It's gone past the 100% level of the Friday push. So if you're in that gold position, you should be smiling, because we are at least in about 20 or so pips of profit over there. So you're welcome to either take some profit, close up a portion of your trade. It is completely up to you, right? What you wish to do there. And you can choose to whether you want to close your position, take some profit, whatever the case is, it is up to you. All right, very, very cool. Right, so gold in profit, USD ZAR in profit. I do want to see if we can get into some US30 trade this morning. And I'd like to write out these trades into lunchtime, right? That is going to be the ideal position, or where I'd like to be by the time we hit this afternoon. I'd like to be in some sort of profitable position this afternoon already. Now, again, remember, this afternoon we do have dollars for lunch. I do have an extremely busy day. I'm meeting with my dad. I'm meeting with some clients. I'm meeting with some lawyers. So it is going to be a fairly busy day. I do want to make it back in time for dollars for lunch, so please stay tuned. If you're not in the Telegram group, the link is down below. I will keep you guys updated in the Telegram group as to when and how. This week, still touch and go. We're fixing a lot of things, getting a lot of errors sorted out. But again, from next week, we will be full steam running at 110% capacity. So obviously just stay tuned for that, and I will keep you guys posted on that. Outside of that, I'm not seeing anything else that I'm really loving. If you guys have a trade opportunity you would like me to digest and break through, please just drop a message, let me know, and we will break that down. USDs are making a nice little push there from a scalp perspective. Yeah, and we've got a pretty eventful day on the calendar, so a lot of opportunities to trade, specifically around the pound, specifically around the euro. Definitely items you may want to potentially pay a little bit of attention to. Good stuff. I quickly want to do a little bit of a test here, guys. I just want to do a little bit of a test here on the spread on USD ZAR, and I get this question quite a lot. I like to okay, what did I just do? Okay, good stuff. And I remember we are running on a 1-minute time frame. So if you want to see spread, it's always important just to remember to add your bid and ask line. So I get a lot of people asking this question. So all you're going to do is you can go on your properties, right click, and under your properties, you're just going to say ask, you want to show your bid and your ask price, right? That is going to show you two levels, right? One being spread, your bid and your ask price, the difference being spread. The important thing here is that when you execute, is that does your price execute exactly where it is that you want it to, right? That is going to be the most important thing. So I'm just going to do a quick test here. I'm going to just pop in an additional little buy. So just have a look at where this market price is. I'll maybe zoom in a little bit, right? So there's where it is. So technically speaking, if I pop in a buy, right, we should be entering on one of these levels. Beautiful. So it literally pops the buy without any slippage at the exact level that we're supposed to be. So I love to see that, right? So this at the moment, I'm trading using hot Forex. Spread and spread is amazing. Slippage is basically non-existent. And again, this is at a time at roundabout we start to get the UK open. So you do get a bunch of volume in that moment, in that time. So that's definitely worthwhile noting. I popped in a little bitty order. Again, my stop loss is going to be just below that level, and my stop loss is going to be just below that level. Right, so I'm looking at holding USD ZAR long over a period of time, and let's see what ends up happening. It'd be nice to see how much of a fall gold can continue to still make. I'm trying to find my gold chart. There we go. Okay, so gold made a nice little pushback, a little bit of a pullback. Nothing, and I'm not anything all too worried about. May tighten up my stop loss there. But I would really love to leave this gold position to do its thing, to run and see where it goes. It's an hourly time frame. It may make a pullback towards resistance, may make a pullback, well, which was one support, may make a pullback to 8.2. So please don't be surprised if you see a retest of that $1,960 to an ounce of gold. But again, you just want to make sure that it stays with market structure. In these instances, what you can do to protect your trade, and I know I get that question a lot from people, is simply utilize some price action and market structures, right? So if you do utilize price action and market structures, you're going to see there's a very clear diagonal resistance that's going to offer you a little bit of safety. So in the event you see a little bit of a push here, right? If we see that push extend past, it's one of two things. If it goes through VWAP, right, which is this purple line over here, if you go through VWAP and this diagonal, that is your basically your cue to get out of the trade, right? If it stays below VWAP and stays below this diagonal, then your sell is still valid, right? So that's just something, traders sometimes don't know when to stay in a trade, don't know when to exit, but that is essentially what we're going to be doing. Now this afternoon, I'm primarily most excited about having a look at the strategy we discussed yesterday. If you did not watch that, please go ahead and watch that. That was obviously yesterday. We discussed what we were talking about in terms of that 3:30 move, then the 4 o'clock move. We're going to see if we can recreate that this afternoon with a bit more accuracy. So what we're going to be doing today, again, provided my schedule will work out, provided I can be back in the studio at a reasonable time, because I'd like to start at about 3:15 to have some time to plan with you guys that we in a trade on the New York Stock Exchange, try and chase that iceberg, and then again, as always, take advantage of a potential reversal. So that is the plan for this afternoon. Again, as always, like I said, I will keep you guys updated. I will keep you guys posted on that. Outside that, guys, listen, I hope you guys are going through the new academy. There is some powerful stuff there. Not the new academy, but the DVDM Markets Quantum Growth Academy. There is some powerful stuff there for you to take advantage of, to learn, to sharpen your skills. If there's anything you've learned out of there that you've found that has helped your trading journey, please drop a comment in the video. As always, we love to hear what your thoughts are about that. I will be extending and doing quite a bit more topics around leverage. Again, in the past, we've spoken about the fact that 100 to 1, 200 to 1 is safe. You can use higher leverage, but you can't max out that leverage. So higher leverage means using less margin to open a position. The problem with those situations is people end up going and taking that leverage to the max, right? They see, okay, they can open up a 0.01 or they can open up a 1 lot position, but they end up maxing out that leverage, meaning that the pip count is then much higher. The movement in the markets counts for a much higher dollar value, meaning people end up blowing out accounts because they're opening up positions far bigger than what they can afford to trade. However, if your risk management stays intact, all it does mean that is if you keep your risk management intact, you're looking at your stop loss in relation to the the lot size you're opening, all that higher leverage does means it uses less margin and gives your account more breathing room to do so. Okay, so we'll be doing an extended episode teaching a little bit further about that and what does that mean. Okay, beautiful stuff, guys. Outside of that, I'll be seeing you all a little bit later this afternoon, but until then, as always, you know the drill. Be safe, trade safe as always. Until I see you again a little bit later. Goodbye.